Hello, thank you for joining me. In this video, I want to review the child care credit as it relates to tax year 2021. Form 2441, child care credit. So if you paid someone, a child care provider or babysitter, to care for your child or other qualifying person so you and your spouse, if filing jointly, could work or look for work in 2021, you may be able to take the credit for child and dependent care expenses. In addition, if you or your spouse, if filing jointly, received any dependent care benefits for 2021, and mainly this is when your employer paid for some or all of the child care or provided the care, you must use Form 2441 to figure the amount, if any, of the benefits you can exclude from your income. You would usually see dependent care benefits amount on line 10 of Form W-2. If this is the case, then you must complete Part 3 of Form 2441 before you can figure the credit, if any, in Part 2. But we are mainly going to focus on how to figure out the credit amount or the amount we will utilize to maximize our refund. How does it work? Well, first, you and your spouse, if filing jointly, must have earned income, must have worked. There is, however, an exception to that. If you or your spouse was enrolled as a student and did not work, and either one of you was a student for some part of 5 months during 2021, you can still qualify as having earned income. This also applies for any month you or your spouse was considered disabled. Who is a qualifying person? Qualifying person is any of the following: a qualifying child under age 13, whom you can claim as a dependent. If the child turned 13 during the year, the child is a qualifying person for the part of the year he or she was under age 13. Also, your disabled spouse who wasn't physically or mentally able to care for himself or herself. Also, any disabled person who wasn't physically or mentally able to care for himself or herself, whom you can claim as a dependent or could claim as a dependent, except the person, disabled person, had gross income of $4,300 or more, the disabled person filed a joint return, or you or your spouse, if filing jointly, could be claimed as a dependent on another taxpayer's 2021 return. In other words, the IRS would still allow you to claim the child care credit under that specific set of circumstances, even if you're not allowed to claim that person as a dependent. There is a special rule for children of divorced or separated parents or parents who live apart. Even if you can't claim your child as a dependent, because let's say it's not your year to claim that child, he or she is treated as your qualifying person if the child was under age 13 or wasn't physically or mentally able to care for himself or herself, the child received over half of his or her support during the calendar year from one or both parents who are divorced or legally separated under a decree of divorce or separate maintenance, are separated under a separation agreement, or lived apart at all times during the last 6 months of the calendar year. Also, the child was in the custody of one or both parents for more than half the year, and you were the child's custodial parent. What are qualified expenses? These include amounts paid for household services and care of the qualifying person while you worked or looked for work, such as childcare provided by a babysitter or licensed dependent care center, the cost of a cook, housekeeper, maid, or cleaning person who provides care for the child or dependent, day camp or summer camp fees, even for camps centered around a sport or activity, qualify if the camp was selected to provide care while the parent or parents are at work. However, overnight camps do not qualify. Expenses related to before and after school care for children under 13, expenses related to a nurse, home care provider, or other care provider for a disabled dependent. And please note that child support payments aren't qualified expenses. Also, expenses reimbursed by a state social service agency aren't qualified expenses. Keep in mind that expenses related to schooling, tutoring, or overnight camps are not qualifying expenses. Who can take the credit or exclude dependent care benefits? You can take the credit or the exclusion if all 5 of the following apply. 1, your filing status may be single, head of household, qualifying widower with dependent child, or married filing jointly. If married filing separately, you typically can't, but there is an exception for those that are married filing separately. We'll talk about that in a little bit. 2, the care was provided so you and your spouse, if filing jointly, could work or look for work. However, if you didn't find a job and have no earned income for the year, you can't take the credit or the exclusion unless you or your spouse was a full-time student or disabled. The care must be for one or more qualifying persons. The person who provided the care wasn't your spouse, the parent of your qualifying child, or a person who you can claim as a dependent. If your child, including stepchild or foster child, provided the care, he or she must have been age 19 or older by the end of 2021, and he or she can't be your dependent. 5, you report the required information about the care provided on line 1, and if taking the credit, the information about the qualifying person on line 2. Married persons filing separately. Generally, married persons must file a joint return to claim the credit. If your filing status is married filing separately and all of the following apply, you are considered unmarried for purposes of claiming the credit on Form 2441. 1, you lived apart from your spouse during the last 6 months of 2021. Your home was a qualifying person's main home for more than half of 2021. You paid more than half of the cost of keeping up that home for 2021. If you meet all of the following requirements to be treated as unmarried and meet items 2 through 5 listed earlier, you can generally take the credit or the exclusion. If you don't meet all of the requirements to be treated as unmarried, you can't generally take the credit. However, you can generally take the exclusion if you meet items 2 through 5. Example, Amy separated from her spouse in March. She isn't separated under a decree of divorce or separate maintenance agreement and uses the married filing separately filing status. Amy maintains a home for herself and Sam, her disabled father. Sam is permanently and totally disabled and unable to care for himself. Because Sam earns $5,600 in interest income, Amy can't claim him as a dependent. His gross income is greater than $4,300. And because Amy isn't able to claim Sam as a dependent, and she is still married as of the end of the year, she can't use the head of household filing status. Amy's filing status is married filing separately, and yet Sam is a qualifying person for the child and dependent care credit. Because of the following facts, Amy is actually able to claim the credit for the child and dependent care expenses, even though Amy uses the married filing separately filing status. Amy didn't live with her spouse for the last 6 months of the year. She has maintained a home for herself and Sam since she separated from her spouse in March. She maintains her own household and provides more than half of the cost of maintaining that home for herself and Sam. Amy pays an adult daycare center to care for Sam to allow her to work. So if, like Amy, who is filing married separately, but yet you meet the requirements to claim the credit for child and dependent care expenses, you must check the box on line A. By checking that box, you are confirming that you meet the requirements listed earlier under married persons filing separately. Now, what about due diligence? Some due diligence questions we could ask, especially when a friend or relative provides the care, or there is no statement from the provider. And remember, we don't want to discourage anyone from taking the credit, but we should cover our behinds. Questions like, what time and what days is the care provided? Seems like a long drive. Does the long drive to the provider bother you? Do you pay cash or check? I totally believe you, but if the IRS wanted to verify this, would you be able to provide proof? The credit became refundable for tax year 2021 due to the American Rescue Plan, meaning that one claimed child could get a max amount of $4,000, and $8,000 for 2. Refundable, going right in the taxpayer's pocket. Can you imagine how all of a sudden many people had a child care provider? Just about anyone who had a child under the age of 13. And taxpayers were ready with statements, declarations, and convincing answers. For tax year 22, the credit will be non-refundable, at least so far. We'll see what happens in Congress. So for 2022, if you pay a daycare center, babysitter, summer camp, or other care provider to care for a qualifying child under age 13, or a disabled dependent of any age, you may qualify for a tax credit on your 2022 taxes of up to 35% of $3,000 worth of qualifying expenses for one dependent child, for a maximum credit of $1,050, or up to $6,000 of qualifying expenses for 2 or more children or dependents, for a maximum credit of $2,100. So the credit is reverting to pre-COVID numbers, and I imagine the number of taxpayers claiming this credit will also dwindle. And here we have Form 2441, Child and Dependent Care Expenses for tax year 2021. The very first line in the top is for the name and social security number of your client. Line A is for married persons filing separately. You would check that box. Line B is to let the IRS know that the taxpayer and the spouse or the spouse lived in the United States of America for at least 6 months in 2021. I'm not sure if line B is going to be here for our 2022 Form 2441. This was part of the American Rescue Plan. In Part 1, we are going to let the IRS know who the care provider was, whether it was a babysitter or a child care center. We're going to provide the address, the identifying number, whether a social security number or an employer identification number. We check this box if the care provider is a household employee. And here on column E, we enter the amount paid to each one of these providers. If you received dependent care benefits, we would complete Part 3 on page 2. Let's take a quick look at that. Here's Part 3, dependent care benefits. And this is where it all gets calculated. Going back to page 1, the next section here is for the qualifying persons. First name, last name, social security number, and the amount of qualified expenses paid for each. Lines 3 to 11 are used to calculate the amount of credit, whether refundable or non-refundable. From here, those amounts flow to Form 1040. And that's pretty much it for Form 2441. Thank you. I hope you found this video useful, and I'll see you on the next one.